Whilst many people may think this is it for Bitcoin this time around, I say it has literally just begun. Here is why we are likely in for a major Bitcoin move throughout 2021. In this episode, we will look closely into the technical reasons why Bitcoin looks ready for a strong markup throughout 2021. And we will also discuss what exactly to expect throughout this markup. And if you believe this will be a smooth ride, think again. If anything, whatever profits you amass throughout this year will most likely come at the expense of your nerves. So buckle up for a mental roller coaster for no pains, no gains. But before throwing ourselves into the loop, you must know that nothing of what I say is financial advice. These are my own opinions and conclusions only, and you must always do your own due diligence before investing, especially when it comes to Bitcoin and cryptocurrencies, as they are highly volatile. From early 2018 until late 2020, Bitcoin traded in a 2.5-year-long accumulation phase. And in the midst of that, in November 2018, it ran through a classical market cycle capitulation as the price dropped by minus 50% in just 1 month. And this happened when the price had dropped by almost 70% already. I remember this well as I watched the price plummet live, and to those of you who have seen things drop as if they were in free fall, in that very moment it really does feel like there is no bottom to the downside, like it's going down to zero. After the capitulation, the price eventually found a drawn out and low volatility sideways range. Despite this, many renowned technicians were convinced, as in absolutely certain, that Bitcoin would go down to either $2,500 or $1,800. That was where they themselves were looking at accumulating. For in their opinion, this sideways move was just another continuation pattern. The same people still talked about how a capitulation move was due, thus completely disregarding the recent one that had just occurred. And as the laws of the markets go, the more people who expect something specific, the less likely it is to happen. And this half-year-long cup is when institutional investors began hoarding themselves. And for those of you who don't know, accumulation and distribution phases are derogatory terms to describe how smart money accumulate money from the stupid money and how they later on distribute it back again to those very same stupid buyers. Now, this area of vigorous sideways movements, as in the accumulation phase, is our main area of interest. For once Bitcoin were to leave this once and for all, that's when things would turn technically bullish for real. And now we have it. The only problem is that no one knew in advance how long this range-bound hovering would last, or if it would manage to break down to 3,000 or lower. For here's the thing. We may have been certain that the price would eventually leave its accumulation phase and move up. But so too did we not want to get stuck in 5 years of nothing whilst one stock after the other shoots to the moon. And neither did we want to buy during this accumulational zone just to watch the price suddenly plummet down to $2,000 and then stay there for as long as it would feel like it. For even if you were to buy into the lower range of the accumulation phase, such outcome could easily leave you 70% in the hole. A hole you're not even certain at the time that you will dig yourself out of. And that's the problem with accumulational phases, for they seem obvious once we're out of them, and we typically kick ourselves for not having bought at the latter stages thereof. But that's like kicking yourself for not having picked the right color at the roulette table. Anyone who accumulated Bitcoin during the Corona bottom in March would now be rewarded with a 1000% profit in just 10 months. Yet no one knew at the time that the markup was near, and that's the danger with accumulation phases. For what we may gain in price, we sacrifice with time. Would you rather make 1000% in profits in 10 years, or would you rather make it in 10 months? Yeah, I know, that's an extreme example, but sometimes extreme examples are the best ways to prove a point. Now, people have long wondered how Bitcoin would react upon reaching its previous all-time high just south of 20 grand. This was predicted by many to be a strong level of resistance, and I too was rather curious about its reaction. But instead, Bitcoin proved that the longer an accumulation will build up, the less important any previous key resistances are. We have seen many cases of this already, Tesla being a prime example. And the reason for this weakened resistance is fairly straightforward. For the longer it takes for a previous all-time high to be tested, the more people who bought into that very top get sick of waiting around and sell off their positions prematurely. This means that once the top is reached once again, there are fewer people who are looking to get out at break even. For that's what an all-time high resistance is, the collective resistance of people who got in at the wrong time and who want nothing else but to get out scot-free. For make no mistake, the people who typically buy into top levels like these are the emotional ones without any coherent strategies. Those are the idealistic and reality disassociated traders that we talked about at length in this episode. But not only does the breakout from the accumulation phase tell us we are ready for another move up, this 3-year-long cup-looking price development much resembles the 3.5-year occurrence between November 13 and April 2017, upon which the price immediately proceeded strongly towards the December 2017 peak. The price rallied by 1600% in just 8 months. We also see this behavior in the 2013 markup, during which the price rallied by almost 10,000% throughout the year. And mind you, this is on a log scale. This is what that very same graph looks like if we were to watch it on a numeric scale. The thing I find interesting and which is absolutely key is Bitcoin's repetitive behavior. What I'm talking about here is the combination of accumulation phases and cup formations. We're not just given one clue, but rather an extra one for safety. These power amassing cup characteristic moves stretch for years in an attempt to bore the masses and sow dinosaur seeds of doubt whether it will recover to new heights again. And once this mission is complete, its move from the previous all-time high to a new one happens aggressively and fast. For each time so far, those steep markups have begun and finished within the very same calendar year. And this is where things get a bit spooky. For as most markets are synced on the whole, Bitcoin's predicted high during 2021 followed by a steep markdown might very well be an indicator of the stock market bubble bursting. Of course, this may not play out at all, but it sure is worth keeping an eye on. If you like this episode, then please like and subscribe and share it with others who may benefit from hearing this too. This extensive Bitcoin series that will stretch throughout 2021 is born on hard work, and any digital support in terms of likes will be greatly appreciated. This recent breakout may look particularly aggressive, but if we compare it to the previous ones on the log scale, there is absolutely nothing remarkable about it. In 2013, upon taking out the previous all-time high, the price took off by roughly 2,000% in just 3 months before correcting at all. And in 2017, upon again taking out the previous all-time high, the price doubled in value and corrected by minus 40% before reaching its ultimate peak of plus 1600% in just 8 months. This is something we really need to keep in mind in order to look at this new markup objectively. For on a grander scale, this move so far should not discourage anyone into thinking that this was it for now. Having said that, there are of course risks involved. One such risk would be if we were to break below the previous all-time high, as this would signify a fake out. For looking at the previous cup breakouts, Bitcoin hasn't even bothered to retest its previous all-time highs. This on its own shows how inherently strong Bitcoin's technical breakouts have really been. In this sense, if Bitcoin were to fall back below its previous all-time high, it will be a very bearish sign. I'm not sure I'd even clap my hands in joy if we were to retest the previous all-time high as support from above, as this would be the first sign of a weakening secular trend in 12 years. But If Bitcoin were to correct down to the $22,000 to $25,000 level, this would in my opinion be the ideal sign of bullishness and equally much the ideal place to ladder in longs. And given the technical precedents, I for one will pretty much go all in at any such occurrence, as the risk to reward would be nothing short of fantastic. My point is basically this. Bitcoin's move over the last few months may seem intimidating to some, but don't forget that this is a technical release of energy after 3 years of power amassing. And if we compare this breakout to the previous ones, we quickly see that we've barely moved at all. This here is still the markup baby phase, and given how short-lived yet parabolic these markups tend to be, they must be put into logarithmic perspective to fully understand the upside potentials from here on. We have now thoroughly discussed Bitcoin's accumulational behavior and established that Bitcoin has recently initiated a new and technically confirmed markup. And based on Bitcoin's typical behavior, this move towards new all-time highs may not survive into 2022. And of course, this now leaves us with the big question at hand. How high can we expect Bitcoin to go this time? And that is exactly what we will investigate in the next episode. That was all for now. Thank you and goodbye.